Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday, the 2nd of November. Starting off with Byotrol, where you can see that there's been a decent bounce. The floor of this rising trend channel from March, the number in question around the 6.3 pence level, 6.25 pence level, and looks like we're just breaking this falling wedge from August. That was around the 7.25 pence level, so an end of day close above that. Initial target, the 50-day line, just shy of 8 pence. Bigger picture target, hopefully by the end of the month, up towards 12 pence at the top of the March trend channel. On to Catenae, which has bounced nicely today again. Obviously, it's looked on as quite a COVID play at the moment. We had the extended bounce and narrow bear trap off the 200-day moving average, or just below the 200-day moving average, earlier in the month. A couple of bounces off it since then, and then going into November now, we've got support looking pretty well entrenched at and above the 50-day moving average at 2.96 pence. Above that, still going for that late August peak at 4.6 pence roughly. But difficult to ignore the possibility that the shares would head towards the top of the rising trend channel that I've drawn there from April, currently pointing up towards the 10 pence level. Oil and gas stocks not flavour of the month at the moment, but one or two exceptions. The first one looks to be Coro Energy, where we're about to have hopefully a break of the 50-day moving average at 0.28 pence. End of day close above that would be the first end of day close above the 50-day line since the end of July, and would open up the possibility of a move towards the top of that broadening triangle on the daily chart from June, heading towards 0.5 pence plus and just shy of the 200-day moving average there at 0.54 pence, hopefully over the next 4 to 6 weeks, or 4 to 6 weeks after any break or close above the 50-day moving average. COVID stocks obviously in a bit of a frenzy at the moment, perhaps not moving quite as much as maybe some of the COVID chasers would have wanted so far today, but Genedrive looking strong, breaking back above 50-day moving average at £1.11, and an end of day close above that should finally be enough to see the shares back up towards £1.50, which is that June resistance line. If you're cautious on the shares, maybe you want to see an end of day close at 117 plus, which is the 20-day moving average, and also that line of resistance from May, which hopefully the stock breaking that would snap the recent consolidation that the stock has been in. So I said oil and gas not the flavour of the month or the flavour of the week, but i3 Energy still bouncing along the bottom there. 4 pence the nominal support here, and we just had a little bear trap below it at the end of last week, but at least while above 3.8 pence on an end of day close basis, looking for at least a retest of last week's 5.5 pence zone resistance, through 5.5 up to the long promised 8 pence plus, which is the top of the May rising trend channel, again on the daily chart. LiDCO gapped up rather strongly today, just worth following the price action. You can see that there was a 2 to 3 day bear trap for the shares just below the 6 pence level, and just flushed out probably the last of the weak hands there. The view here is at least while we're above the 10 pence level, which is August resistance, looking for a best case scenario target up towards the top of that rising trend channel from March, as high as 13.5 or maybe even 14 pence over the next couple of weeks. Remote monitored systems, difficult to avoid as well at the moment, going great guns. The key level, I suppose, at the moment is really around 3.5 pence. That was a resistance line projection from earlier in the year, actually not earlier in the year, back in 2018, so above 3.5 pence, still chasing further upside. Best case scenario target here up to 6 pence, which is that late 2018 or December 2018 resistance line projection, and hopefully that would be hit over the first part of November, obviously, even though we are very overbought at the moment. Stock which has delivered on the upside and hit one of the pre-designated targets we were looking for, £1.20, has been reached. Had that little pullback towards £1, but then bounced off that old resistance from June quite successfully. End of day close above £1.20, which was the October intraday resistance. Could take the shares up to £1.50 by the end of the month as a best case scenario target, which is a line of resistance from March. So many of the resistance line projections obviously from that time in the market. On to Sensyne Health, which is a personal favourite of mine, largely because it's behaved itself over the recent past very well, and also because it's been gapping up in a very impressive way. The current view is that while we're above the floor of the rising trend channel from July, that's at £1.20, we could hit a best case scenario target here as high as £2.30 over the next 4 to 6 weeks. End of day close through £1.40, hopefully the trigger for such an ambitious looking move for the shares. TomCo has its fans as well. Looks like it's starting to rehabilitate itself at the moment. Obviously we've got the support towards 0.5 pence, which has been the case since the end of September. So above that, looking for a retest of the 0.9 pence to 1 pence area. If you're looking for a trigger for a potential move to the upside, then the obvious one would be a break of the 50 and 200-day moving averages, currently at 0.66 pence. So an end-of-day close through that zone, hopefully the final trigger for a move to the upside. I suppose there's a line of resistance there from July to be broken in the mid-0.6s. Just a couple of stocks to go now. Tern finally come up with the goods and hopefully shaken off the bears for good as well. I think the last time I looked at it, the end of last week, I was looking for a rather ambitious sounding 16 pence target, which has just been hit now. We could probably do a little bit better, in fact, than that. End of day close through 16 pence. Could take the shares up to that higher broadening triangle target up towards 21 or 22 pence, hopefully over the next few sessions, maybe the next week or two. Nice golden cross there between the 20 and 50 and 30-day moving averages, and we also see that the 200-day line currently just above 8 pence, also starting to rise, which can be a leading indicator on future upside. Finishing off with XLMedia. And here we've got a stock which is hopefully just starting its journey on the upside. A nice end-of-day close today, hopefully above the 200-day moving average, just shy of 24 pence. Should be the trigger for a move towards that late February resistance line projection target at 42 pence. Obviously, if you are cautious on the shares, you'd wait for an end-of-day close through 27 pence, which was the October intraday peak. That's it from me today. More updates tomorrow.